ye be confused on what open interest is? Well, look no further. In this video, we're going to talk about how to analyze the option chain and understand why open interest is important. For those of you that are new here, my name is Forrest. I invest in stuff. I'm a day trader. I day trade futures every single day live in my Discord. I use prop firms like MyFundedFutures. If you want to sign up for MyFundedFutures or any of the other prop firms, check the link down under this video. Yes, I am an affiliate. Yes, I'm a capitalist. It's really weird when people try to call me out for trying to make money on a day trading video. But let's talk about the option chain. Okay, so just having fun here. Options. So even as a futures trader, I look at the options chain every single day. One, because I trade options. But when you're trading indices like ES and NQ, we'll stick to ES in this video. Excuse me. It's important to know what the major liquidity levels are. There's things like supply and demand. Supply and demand exists in the option chain as well. For example, if you're at all-time highs in the market and people are FOMOing, that is fear of missing out, buying into binary calls, they're going long on call options. That means they're buying calls. For those of you who are maybe coming from Forex or other places don't know what that is, they're basically buying a contract that says, hey, price is going to go up. Well, what if a gajillion people do that? What if a ton of people buy this contract? One of the things that will happen is if the price goes high enough to where those contracts are in the money, whoever sold those positions, market makers very often, large funds, are going to face heavy losses. If you've ever sold premium, which is the act of writing or selling an options contract, you lose money the more and more your contract goes against you, right? It goes into the money. So what will happen is if we look at the options chain and let's say that the price, and I'll show you a chart in a second, but I want you to really think about this and internalize this information because this is actually key, right? All fun and games, the intro of this video aside, you actually need to be able to internalize this stuff and understand it on a fundamental level. So listen to what I'm going to say and think about it. The market's at 5,090, okay? The chain, on the options chain, there are options for 5,090 calls, 5,095 calls, and 5,100 calls. The open interest for 5,090 is 12,000. The open interest for 5,095 is 25,000. The open interest for 5,100 is 90,000, okay? You can see this. You can see the volume. You can see the open interest. I combine the two together, volume and open interest. Open interest is the value in the morning, and then the volume is the amount of positions open throughout the day. Add the two together, and you can get a sense for the amount of people interested in this contract. Again, we're getting close to 5,100, and there's a huge amount of interest at that price. What are the odds in your mind that we reject that price? Now, we know, of course, that the market is an auction. And just because there's a ton of open interest doesn't mean that it won't go to that price. But if we have a very clear cliff in interest, this is the key concept to this video. There's a cliff in interest. It's not a steep slope, right? So as you go up the chain, it's not like a ramp. It's not smooth. If you go from something like, again, a couple thousand contracts, like 10 or 12K, and then the next contract has an order of magnitude more interest, like 90,000, you're very likely gonna reject that price to the penny. We see this all the time on ES, right? This happened twice in the past week, by the way, right? We had an M pattern, double top, play out, rejecting out of an open interest wall. I talked about it in my last video, talking about, you know, the gamma trade with the bot, and it happened again just this past Friday. Sunday, I'm filming this video. This stuff becomes clear as day and is really useful, especially when you're at all-time highs. One of the problems or the difficulties when you're at all-time highs is that there's not information above you. There isn't an auction above you, but there is on the option chain. And that's so, I mean, it's pretty cool and useful, but the option chain allows us to see activity above all-time high prices. This is magic, guys. For everybody watching this video, you're welcome, but this is actually magic. It's important because, again, we're at all-time highs. You can do this on ES, you can do this on equities, you can do this on anything that has options. You can understand and do TA on price areas that we literally have not been to because we can see interest on derivative products like options above those prices. Okay, so I'll stop explaining it. Let's go ahead and look at an example. Quick little mid-video commercial. Just partner with MyFundedFutures. Use the code down below in the description if you want to sign up with them. A ton of content coming down. I'm also the face on their channel, so go check their YouTube channel out. And if you want to sign up with any of the other firms, of course, Apex, have 20 accounts with them still doing that. You can use my code below. They have 90% off still until the 27th. Also Purdia, great news trading firm. If you want to use Purdia, the link is down below. All the firms that I think are worth your time are down there, guys. I don't just have links for everybody, okay? In order of precedence, I'd say MyFundedFutures, Apex, Purdia. And that's it, but yeah, check them out. Oh, actually, I'm not done with the commercial. If you need help day trading, we do have a Discord, okay? We day trade live every single day in there. Teaching people how to trade is our thing. So it's not just call outs on prices, it's not just bot call outs or things like that. We actually teach people how to trade. We'll help you become profitable so you can actually get, consistent payouts from all of these prop firms. You can start doing like 20, 30, 40, 50 bands a month. Very feasibly, if you actually come and listen to the things that we're saying. We have people who are doing it, and we have a 7-day free trial, so you can see for yourself. If you don't believe me, I don't got to sell you on it. You can literally just come and see. Most people, when they hop in, they listen to us for 2 days, they're like, oh wow, you guys are the real deal, because we're literally just trading. We're actually just trading and talking while we're trading. Let's look at SPX on Friday. You can see here that I have still my notes here from this trade. There was actually 2 really interesting things that happened on Friday. We'll go back to here. So one, I called that the POC was going to shift down on ES from where it was. So we go to the 5-minute. I am a volume and price trader. Okay. If you're not familiar with these indicators, I use different variations of the volume profile, which shows us volume at prices. That's this histogram that we see here. It is a sideways bar chart. So as the bars extend, there is more volume at this price. The place where there is the most volume is the point of control shown in the red line. So 5,118, we can see it there. I predicted, just due to the market activity and the fact that there was a open interest wall above on SPX, that we were going to come down. And I'm thinking, where are we going to come down to? I'm looking at the histogram, and we can see on the histogram that there was a ton of participation at this price. So it was like a 60-40 between these 2 prices. Looking above, we have this major trend line. Okay, we're front running it a little bit. I said, okay, we're very likely going to come to this price. It's a very grindy day. Ton of TA, and then I ended up just sniping where it's going to come down to at 51.03. I called that out like an hour and a half ahead of time. Okay, and we can see that the POC came down to 51.03 to the penny. I'm good. So that's one half, is looking at TA on ES. Then I was looking at the options chain on SPX, and there was a ton of open interest calls here at 5,100. Don't even have to bring the chain up. One, because my broker is not going to show me the open interest from Friday, but you can do this on your own. Open up your broker, and you can see open interest every single day. It's going to give you 2 values. Okay, going to give you open interest, which is what we call OI, and it's going to give you volume. Okay, open interest is the amount of contracts that are open positions coming into the session. That value doesn't change. It'll update at the end of the day. For zeros, though, for zero data contracts, we really want to be concerned with the volume. I smashed the 2 together to understand general open interest. People who trade in and out of these positions, it gives me a general open interest. Okay, we had, if we go to the 5-minute, so remember everything that I said on ES, where we were rejecting. Okay, we had the major trend line, grinding price action. We have this M pattern. So at this time, right around 115, okay, let me hit the replay, go to here. So it's about 115 on Friday. I'm looking at the option chain. I see a huge amount of open interest at 5,100, which is up here. Okay, it's also the previous high. Okay, I'm going to slow down this part so you can really understand this. We have a previous relative high. We have a huge amount of open interest at this level. Okay, I also see that ES is grinding. There is a lot of participation lower in the auction on that volume profile. And we have the major trend line above. Tons of confluence for us to close lower. Doesn't mean we have to have a huge sell-off, but very likely when we come up to this price on SPX, we're going to reject. That's what I think. And I mentioned it in the Discord. Why? Because in order for us to crack above this, and there's 2 things here. This is also a dip in the volume profile. We see that there's a low amount of volume here. It's a dip in the volume profile. For us to go above this, all of that interest, for those to stay in the money, we would need a huge amount of volume. Why? Because there's incentive for people to push the market down. Okay, we're not going to go into all the theory about this, but let's just say people who are selling large amounts of premium have incentive to sell into the market to force it lower. Okay, what will happen is we get here, we reject. That's my thesis. Okay, and what actually ended up happening, of course, we know how it ended up going. We come up to this price. These actually went into the money barely, but it's 130 at this time, right? I'm thinking, all right, they're not going to stay in the money, right? Because they're not going to pay out these premiums, and we reject. We do this M pattern. And this is the second time this happened in the week, by the way, all because we had this huge OI wall here. What was interesting is that we also had a ton of OI here down at, I believe, 5,090. Okay. And if we look at where the market closed, where did we close? Closed at 4 p.m., closed at 88. Maybe the OI was a little bit closer, but we closed between 2 major open interest levels, which is the key here, right? So the market ended up grinding in between these 2 price areas. The key here, though, was this intraday 5,100 OI wall. Why? Because at this time in the middle of the day, people are looking for a possible sweep of the highs. They're thinking, oh, maybe it's going to crack up here. We could see people FOMOing into calls. What's really cool about tracking the volume on the option chain is that the volume on the 5,100 calls was increasing and increasing and increasing and increasing and really increasing as we get to this area. Because it's Friday, and for some reason people think think, oh, it's going to fly up. But if you looked at the premiums on 5105s, 10s, 15s, very little interest. As an experienced options trader, I know that you're not going to get this nice ride up the ramp here without volume on the rest of these contracts. We needed volume on the rest of these contracts. There was no volume. What you had was just a wall here at 5100 calls. Okay. So that's why analyzing the options chain is so important. It just becomes more technical analysis. It's volume at prices. You're just looking at volumes of options. And again, this is super duper important because if we zoom out on, say, ES again, or we can even just look at SPX. Let's look at SPX on the 1 day. Zoom out. You can see that on SPX, and we'll go to the 1 month. There's really kind of hone this in. You can see that we're at all-time highs. Okay, all-time highs. So how do you know when you're going to reject when you're at the highs of the market? It's really, really hard to do unless looking at options. It's actually not hard at all. It's hard for most people to do unless you have experience, but it's not hard at all. It is harder in general. I would say it is harder to trade around here in general because everyone's trying to short. We've talked about swing shorts, which luckily took some profits on those. Those are hurting deep red right now, just to be candid. My swing positions. But if we reject next week off of this macro area, those will be nice again. That's about a 10K across the different positions. Have about a 10K swing short position at the moment, which are all nicely red. But those will switch to green. Again, they went red inside of a day. They could be green inside of a day. Those are multi-week expiry positions. All that being said, signals that you need to look for intraday and on macro. So I talked about the Friday session, but on the macro as well, you also want to look at the options chain. You can see on further expiries, interest, right? As you go a week out, a month out, you will see, where'd my mouse go? You will see interest on these options that are like 100 points out the money, and you'll just randomly see contracts that have a ton of open interest. And you have to think, what does that mean? What is it going to mean as we get closer to this price? Well, if something has a ton of interest now and we're a week away, as we get closer to it, that open interest is going to go up exponentially. I promise you it will. I've seen it so many times, which can really provide juice in the sessions. And when that 1 week expiry becomes 0 on that day, it can become a huge bounce area. And there's likely other areas of confluence. Tracking this type of stuff, honestly, just takes general market awareness. You just have to look. It only takes a few seconds. You literally just scan through your options, scroll up and down, and you'll see random spikes in volume, and just take note of it. Take note of it as you start to do TA on macro levels, and you're looking for price areas on maybe ES. I'll switch over to ES. We'll go to the 4 hour. We'll turn on the visible range volume profile. We'll turn off these other things so it's less noisy. As I'm looking at the 4 hour and we see these areas below, so I have this bounce thesis here, kind of came down into this low volume node here and bounced. But as we're looking here, these different price areas are going to start to give confluence on what you see on the options chain. They will on SPX. So look at ES and SPX and you will see this confluence there. So that's all this video is about, looking at open interest in options. Even if you're just trading futures, if you're trading indices, you need to understand what the open interest is on the underlying index, because that provides a thesis for you to take a long or a short on ES or NQ. And I only trade ES or NQ every single day. I do trade options, but even when I'm not trading options on SPX, I'm still looking there for my futures trades, which is an immense amount of edge as a discretionary trader, which is what we ultimately are. I'm a fully discretionary trader using my experience and technical analysis to make trading decisions intraday. Subscribe to my channel.